Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. It appears President Trump's tariff announcement sent a shockwave through the U.S. and Canadian markets. Ross looks at gold, crude, and the Canadian dollar. People's Party of Canada leader Maxime Bernier joins us to talk about tariffs, Canada's economy, and measures he would take to make Canada the most prosperous nation on the planet. He also looks at the idea of Canada becoming the 51st state. Longtime BC broker Victor Adair looks at the impact tariffs will have on Canada, whether gold will continue its record-setting pace, and the overall scenery of the investment market. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Always good to be with you, Jim.
Ross, what kind of reaction did we see on the stock markets to the confirmation that the tariffs against Canada and Mexico from the U.S. will start on the weekend?
Well, the markets had a number of hiccups during the week, seeing as, there was a hesitation earlier about whether there would be the tariffs and how much they would be. And, here we are on Friday afternoon. Markets are closed, but we still don't have the final details, and it will all get down to the fine print in terms of how big the tariffs are and, specifically what they're on. So during all of this, the market's really thrashed around. You look at the Canadian dollar, managed to fluctuate about a cent 2 or 3 times during the day here on Thursday and Friday. So it's just a lot of uncertainty. Stock markets reacting to it as well. A week ago, AI was all about basic stuff that we had an understanding of. And then over the weekend, DeepSeek became the story of the week. Monday, NVIDIA and all of these stocks just got hammered. Most of them recovered a good 40 to 60% of the losses that occurred on Monday. But overall, a choppy week. As it turned out, we tested the highs, but couldn't go through them on and hold on the Dow or the S&P. Closing down on the week for the S&P, still an up January, which is quite good for the market. But as always, you take a look at the underlying items. The advanced decline line, not that healthy, and the 17-year cycle we're looking at, that is now well into its topping phase. And, the last correction we had into the 10th of January on the S&P and the NASDAQ came down and tested the 20-week moving average, which is a pretty critical support on the trend that we've been watching here for the last 2 years. And it was a pretty good bounce out of there, but we continue to view that as an absolutely critical support area. If it's violated, then the optimum would be a 10 to 15% price break, which is just a classic within any long-term rising trend. So anything probably around 5,500 might be looked at as a pretty good support area for the S&P.
What's going on with gold?
All-time highs. Doesn't matter whether you measure it in Canadian dollars or U.S. dollars. The spot price managed to get up around $28.50 on gold. Couldn't hold it into the end of the week, but it's just doing a classic stair-stepping higher, which is what you tend to see in the bull markets. We had that pause from September through until just the last week or two. It was a nice breakout at 27.40 out of a tighter consolidation that we've been having. And, we had viewed that breakout as important in terms of reestablishing the momentum on the upside. The key now, shorter term, the 20-day moving average, which is around 27.50, and the support area for the most recent pullback at 27.20 become the important levels to be monitoring at this point. It's good to see that finally silver's come to life. It managed to pop through its best levels in many weeks, and the platinum and palladium also having some excellent moves here. The platinum price has gone from $9.10 up to $10.43 in a span of 2 weeks. So getting a little overbought right now, but this one could be setting up for an intermediate term breakout.
What's going on with crude?
Crude oil, nicely oversold about a week ago. We did manage to get down and get some good oversold readings, I guess 4 or 5 days in a row here. We got a sequential 9 on Thursday, so that's 9 consecutive days with lower closes than 4 days earlier. That occurred on Thursday, and it's with a 50% pullback from the $67 level up to 80. So good spot in here at the 50-day moving average. Good chance that we're going to see a decent recovery out of here. And the seasonality would still be positive out until March. So if you see any momentum to the upside, we're at 73.75 to close off the week. I think if you see any upside follow through next week, it should manage to gain some momentum there.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, Maxime Bernier next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Maxime Bernier, founder and leader of the People's Party of Canada, online at peoplespartyofcanada.ca. He's running to be the next Prime Minister of Canada. You can follow him on X at Maxime Bernier. Max, welcome back to This Week in Money.
Thank you very much. I'm very pleased to be with you.
What are you, Mad Max, about today?
Oh, my God. I'm mad about our government in Ottawa. They're not doing what must be done for Canadians. And actually, with the tariff that Trump will impose tomorrow, we need to be sure to have a strong economy. And we don't have a strong economy with our huge deficit, taxations. We need to reduce taxations, reduce the deficit, and working for Canadians. But in Ottawa, with these establishment politicians, that is not happening.
On Wednesday, the Bank of Canada dropped the bank rate another quarter point to 3%, and the Bank of Canada is ending its quantitative tightening program prematurely. Are these actions a red flag for the Canadian economy?
Yes, it is. We are still have inflation in this country. The official inflation rate is about 2%, but everybody knows that it is more than that. The real inflation in this country may be about 5-6%. And now, what they're doing, that won't stop inflation. And the Bank of Canada has a mandate to be sure that we will fight inflation in this country and have a stable Canadian dollar. But it's not happening right now. So we'll see. But I'm not optimistic for the future, the economic future of our country.
President Trump is threatening to implement a 25% tariff against Canada this weekend. He's requested Canada to stop illegal migrants from crossing the border into the U.S., plus drugs and especially fentanyl. It seems like a reasonable request. Federal and provincial politicians want to fight Trump on this. How could federal and provincial politicians benefit from more migrants and drugs crossing into the U.S.?
Yeah, my God. The common sense must prevail in Ottawa, and that's not the case. Trump does not believe in us when Trudeau said that he will reinvest $1 billion to protect our borders. It's just, words, and Trump wants to have action. So that's why he's imposing these tariffs. And what we must do is to keep calm and have a discussion, use diplomacy, and to work on our challenges, that is our borders, and also fentanyl, who is all over in Canada and in the U.S. That's why Trump is imposing tariffs. It's because we are, a threat to the national security of the American, and also, I must admit that we are a threat also for our own security. So the solution to be sure that these tariffs won't be there for too long is to solve that. The borders, having, a moratorium on immigration, deporting all our illegals, having more security at our borders, and also being tough on crime and on drugs.
What could a 25% tariff against Canada do to the Canadian economy?
But yes, on the short term, it will hurt our economy. That's why, if we add other tariff and if we are going to a trade war with U.S., we won't win. If we do that, we may risk to be in a recession sooner than later. I don't want that. So, the solution is not to have a trade war with dollar by dollar and imposing more tariffs on importation or tariff on our exportation. Is to have a discussion and diplomacy and reinvesting in our own security for the national security of Canadians. We have to do that to prove to Trump that we are serious, and these tariffs won't stay. Actually, they won't stay because also Trump knows that these tariffs would create, higher prices in the U.S., and Trump, during his election, the most important for him was to fight inflation. And like that, that's not good for American consumers when prices will go up because of this tariff. So for me, it's just short term. We need to relax. We need to reinvest in our security and do what is good for our country. And these tariffs will disappear.
President Trump keeps mentioning that Canada needs to become the 51st state. Are there pros and cons to Canada becoming the 51st state?
I think it is a joke. Trump is, if he's serious, Canada, we are about 40 million people here in Canada. And you may remember that before the election in the U.S., the presidential election, they did a survey in Canada and polling, knowing what will be the position of Canadians. And, more than 60% of Canadians said that they would have voted for Harris and Democrat. So what I'm telling you, I don't believe that Trump wants another California. 40 million people will vote Democrats. That would change the electoral face of the U.S., and it would be very difficult for the Republican to be back in government.
In his first week in office, President Trump has been cutting massive amounts of wasteful spending. Does Canada have massive amounts of wasteful spending to cut?
Absolutely. We have a deficit of $60 billion this year. We have a huge debt. We need to balance our budget in 1 year. We can cut, foreign aid, saving $10 billion, corporate welfare, subsidies to big businesses. We can save another $10 billion. So what I'm telling you, it is doable to balance the budget in 1 year and cut all the waste that we have here in Canada.
What could eliminating the capital gains tax do for the Canadian economy?
That would be great. That will, bring more investment, because we know that if we want economic growth, we need to have investment. Investment is the engine of the economy. We need investment. So by cutting the capital gains tax, that will help. investor will have a better return on their investment. So that's why we need to do that. That's part of the proposal of the People's Party of Canada. But if you look at Poilievre and the Liberals, they just want to decrease the increase that Trudeau imposed on the capital gains tax. So the real solution is to abolish that. That will be good for economic growth.
President Trump wants to eliminate federal income tax and replace it with tariffs. Is that a model Canada should look at?
I don't think it will happen because, the federal government in Washington is very big. And, tariff won't be sufficient for being able to raise the money that the federal government needs. If Trump is serious, he will have to cut a little bit more to be able to balance his own budget and having a smaller government. So it's a nice idea to not have an income tax. I'm for that 100%. But to do that, you need to have a smaller government. But here in Canada, we need to work toward that. My goal would be to have a flat tax for everybody, flat income tax. And the best tax, as you know, is the consumption tax, because consumers can decide if they will pay tax or not. If they spend, they will pay taxes, and if they don't spend, they won't pay taxes. So the best tax is always a consumption tax because it is pro-growth. I'm for that, but I don't think it will happen in the U.S. Under Trump. It's a nice idea. It's good that we are speaking about that, but we need to be serious and cut government before.
Is business tax in Canada a drag on the economy?
Yes, it is.
I recall Prime Minister Harper, when he reduced Canadian corporate taxes, hundreds of U.S. companies moved their head offices to Canada. And with that drop in federal business taxes, we actually saw an increase in federal government tax revenue. Would you do the same thing?
Absolutely. We will have a flat tax on business at 10%. And yes, you're right. That would create more investment, more businesses will come to Canada, and at the end, the federal government will have more revenues coming from the corporate income tax.
It looks like the U.S. dollar could be putting in a topping pattern. If the U.S. dollar weakens, are the prices of commodities likely to rise, and would that be good for the Canadian economy?
When the Canadian dollar is weak, it is not good for Canadians and not good for Canadian consumers. As you know, we have inflation right now in Canada. Prices for your groceries going up because, we are importing, goods and we are importing our food, fruit coming from the other countries. So that is having an impact on Canadians, consumers, when the Canadian dollars is weak because our imports are more expensive. But it's a good news for Canadian businesses who are exporting. These businesses, they can be more competitive with their product in the U.S. or other markets because they have the advantage of a low Canadian dollars. But I prefer to have a Canadian dollar that will be higher than that and more, in pair with the U.S. dollar. That would be the best. But right now, this is showing us that our economy is not strong.
CSIS says there are traitors in Parliament. The Hogue report does not agree and gets sealed for 99 years. One, can any of the 338 members of Parliament be trusted? And two, could this affect the Canadian economy and the Canadian dollar?
Yeah, we need to have members of Parliament that will be loyal to our country, not to their country of origin, and that's important. So we have here in Canada some police office, Chinese police office in Montreal and in Toronto. That's illegal. That's unconstitutional. That's not respecting the international law. So we must do something. We cannot tolerate that. The Chinese, they have no right to have a Chinese police post here in Canada, office here in Canada. So yeah, let's fight for Canadians and be sure that our people who are in Parliament are ready to represent us, not a foreign country.
Could the Canadian real estate market be in jeopardy?
It could, with people working from home, and that's the real estate in the U.S. It's not so strong right now. I'm speaking about downtown big cities. that can be the same here in Canada if it's not right now. So, yes, the real estate, the commercial real estate is at risk. And, there's a lot of buildings who are half empty. So that is having an impact, not only for the owner of these businesses and these real estate, but it's having an impact also on us here in Canada, on the economy in general.
Canada has debt bubbles everywhere. Can debt bubbles be unwound safely, or do they tend to burst followed by a rebuilding?
Yeah, it can be safely, actually, if we are serious about that. Now we are promoting, more and more debt, and the federal government is doing that. Consumers have huge debt. They may be able to have more money in their own pockets by lowering taxes. They will be able to pay their debt, and the Canadian government must do that and be the example of that. So I don't like that huge debt that we have as a country and our huge deficit. That's why we must be serious and tell the truth to Canadians and have a plan to be sure to lower taxes and balancing our budget.
The job is to make Canada the most prosperous country in the world. What would you do?
First of all, I will be sure that here in Canada you have more freedom. Because when you have more freedom, when you have a smarter government that won't interfere in your day-to-day life, that won't put a lot of regulation on businesses, you'll have more economic growth. So less regulation, a smarter government, lower taxes, balancing the budget, real free trade across our country. The fathers of our Constitution created that country in 1867, and they wanted to have an economic union. And, after more than 150 years, we don't have that in Canada. Let's be serious, abolish all the trade barriers between provinces. So all that will help to be a free and a prosperous country.
Yeah, it said trade barriers between the provinces where we can't buy Ontario wine, they can't buy BC wine. Alberta beer is banned from BC, or they just came to an agreement. Isn't that insane? If I have a trade certificate from Nova Scotia, I can't work in Alberta?
Yeah, no, it is crazy. You must have the right to work in other province. A doctor in Montreal cannot work as a doctor in BC. Why? If he's competent to work in Montreal, he must be competent to work in BC. We need to stop all that, and we need to have a free movement of people, and they must be able to work where they want all across the country.
People like living off Trudeau's handouts. How tough is it to get people off the government gravy train?
Yeah, it's a big gravy train. People like that. They think that it's free. Nothing is free. They are paying for all these programs and subsidies by inflation. Inflation is a tax. It is a hidden tax, but it is a tax. When you pay 5-6% inflation, you cannot be prosperous. It's very expensive. And so that's why the way to do that is to tell the truth to Canadians. And that's what we are doing at the People's Party. We want you to be independent. We don't want you to be dependent on the government. That's why, with less regulation, more freedom, more money in your pocket, you're going to be independent. But now we have a lot of Canadians that are dependent on the government. We need to stop that.
Agenda 2030, 15-minute cities and C40 cities in Canada. A lot of money's being spent on this agenda at all levels of government. Is this trend dangerous and costly for Canadians?
Yes, it is dangerous. We don't believe in that philosophy. That's why the People's Party won't participate in that. We are promoting, our country first, the sovereignty of our country first. That's the People's Party. And all these 15-minute cities and woke ideologies coming from the UN, we won't participate in that. And by the way, we'll be able to save a lot of money.
Canada's a resource-rich country. What needs to be done for Canada to take advantage of this in-ground wealth?
Build pipelines all across the country. I said that in 2019 that we must build pipelines, and now it's more urgent and important than ever with the tariff that Trump will impose on us. We need to put our house in order. We need to be able to export our natural resources not only in U.S., but all over the world, and we are not able because we don't have a pipeline that is going from Western Canada to the sea in Atlantic Canada and in the Pacific. We need to be able to have that, and so that's a priority. Let's build pipelines, and the federal government can do that. That's under the responsibility and the jurisdictions of the federal government. Let's do it.
LNG, Germany came to Canada begging for natural gas. Trudeau told them, go home, we'll send you some hydrogen maybe someday. Would you encourage and promote LNG exports on both the east and west coasts?
Yes, absolutely. All these projects, it's sad that these projects was not able to go ahead because of Trudeau and his radical environmental policies. So let's change that, and let's be sure that Canada will be open for business.
Are you currently looking for candidates to run for the People's Party, people who love Canada?
Yes, absolutely. That's what I'm doing. We are, a new populist political party, and I can tell you our party will be ready for the next election. We have up to now 200 candidates selected and approved, ready to run, to fight for you, to fight for Canadians. And I can tell you we'll have a full slate of candidates all across the country. So like that, every Canadian will be able to vote in line with their values and be able to vote for the People's Party.
Where can people follow you and the People's Party of Canada?
Oh, they can follow me on Twitter or X, Maxime Bernier, or the People's Party of Canada X account. They can follow me on Facebook and also on all the social media, YouTube, but also they can go on our website, peoplespartyofcanada.ca, and read our platform. Click on platform and read it. We are the only national political party that is having a platform, and that's always the same ideas. We are fighting for ideas, and at every election, we are fighting with passion and conviction about our vision for this country, and we believe in people. We don't believe in a big fat government that will tell you what to do. We have faith in people. We have faith that you have the ability, the dignity, and the right to make your own decisions and determine your own destiny. That's the People's Party. That's why we are calling our party the People's Party, because we are there for the people, for Canadians, and putting our country first. So if they want to know more, they can go on our website and read our platform. And I hope that if you like our platform, please support us. And if you don't like our platform, don't vote for us because we won't change.
Would your membership be able to suggest ideas to you instead of the leader telling his supporters and candidates what to do?
Yes, absolutely. If their ideas are in line with our philosophy, as you know, the four principles of our party are individual freedom, personal responsibility, respect, and fairness. And if their ideas is in line with our principles, we will look at it for sure.
Maxime, thank you so much for being on This Week in Money.
Thank you, Jim. I'm very pleased to have that opportunity to be with you today.
My guest has been Maxime Bernier, founder and leader of the People's Party of Canada, online at peoplespartyofcanada.ca. Coming up, Victor Adair, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in BC, but still very active in the markets. His website, VictorAdair.ca. He's speaking to us from Parksville on beautiful Vancouver Island. Welcome back to This Week in Money.
Jim, always a pleasure to talk with you. Thank you for having me on.
Now, you're in Parksville right now, but you just returned from 2 weeks in the United States. What are your thoughts on the unfolding tariff drama and the Canadian dollar?
Well, I got lots of thoughts. How much time have we got?
As long as you want to go. It's the internet. There's no time limit.
I was just thinking on the way back here how much time I've spent in the United States over the past number of years. And I'd say I've lived in the United States for about 2 years. I mean, I've been down there for several months at a time, a few times, and then all the visits I've had, even just going to Hawaii for a couple of weeks if you add it all up. So I've been in, I think, 27 different states of the Union. Basically, I'm very comfortable being in the United States. Now, I spent a good chunk of my career working for large American commodity trading firms. I was in Chicago and New York a lot because of that kind of business. I'm indistinguishable in my book from Americans, and I'm very comfortable to be there. I'll tell you one thing. When I was in Palm Springs just this past week and last week, anytime you're in a parking lot, like at a mall or a golf course or whatever, about 10% at least, I'm thinking, of the license plates that I saw were from British Columbia or Alberta. And going across the border, this was so strange. I mean, my son was driving. We went across early in the morning at the, that crossing down by White Rock. We were the only people there, and we pulled up and we handed a guy our passports, and he says, "So where are you guys going?" And Drew said, "Well, we're going down to Palm Springs to play some golf." And he says, "So which one of you is the better golfer now?" And there was a little silence between Drew and I said, "Well, he is." And the guy handed back our passports and said, "Have a good time." I thought, well, that's great, Getting across the border was no problem. Then coming back into Canada, by the way, I flew back, was no problem. I tell you what, part of this is Trump saying Canada's got to clamp down on the fentanyl that's coming into the United States from Canada. I agree with him, but Canada's not the enemy, right? I mean, the enemy is China. That's where the fentanyl's coming from. So why doesn't Canada and the United States work together to block that? Okay, the other thing is, and Trump's got a point here, Canada is not paying their fair share of what it costs to defend North America. Yeah, we've been light. It's like when you go out for a bunch of people for dinner and everybody chips in at the end and you kind of put in a little bit, No, he's got a point there, and we need to up our commitment to that kind of thing. The comments about the 51st state, I'm going to say, in my mind, we are already the 51st state. I know there's a lot of Canadians that feel as though they're better than Americans. I get it. And I tell you where I see a similarity is between New Zealanders and Australians. If you say to a New Zealander, "Oh, I hear your accent's funny. Are you an Aussie?" they get their back up right away. But there is nobody on this earth that looks and acts more like Canadians than Americans, and I really think we should get along. And here's Trump coming along with his sharp stick, and he's poking, and that's his way. But anyway, as I said, I've lived in the United States for about 2 years in total in my lifetime. I really enjoy being down there. I get along well with them. I think Canada and the United States ought to be best of buds. And I kind of hope that we don't go crazy with retaliation and all that sort of thing, and cooler heads will prevail. We'll see. Now, your other question, the Canadian dollar. I've traded the Canadian dollar actively for the better part of 50 years. I pay a lot of attention to a lot of parts of what goes on in the market, and certainly one of those things is positioning. And as I've been writing in my blog, Jimmy, over the past few months, and saying in interviews with you and others, the speculative short position on the Canadian dollar over the last few months here is as big as it's ever been. Like, a lot of people are short, and this is in the futures market, are short the Canadian dollar, looking to make a buck if the Canadian dollar goes down. Now, here will be the really interesting thing. On Friday, I guess late, it seemed we got an official confirmation from the White House spokesperson that the 25% tariffs will go into effect starting on the 1st of February against Mexico and China. Mexico, pardon me, and Canada. When that came out, the Canadian dollar dipped a few ticks, but that was about it. Interestingly enough, when that announcement came out, the stock market took a sharp tumble. That's the American stock market as well as the Canadian one. And bond prices fell, and interest rates went up. In a way, the market didn't like that. that people have been thinking, well, maybe they won't put a tariff on oil, or they won't do this or that, or, they're bluffing or whatever. Anyway, from a trading point of view, we've got the Canadian dollar here on a weekly basis, closed at a 5-year low. On a monthly basis, we're at about a 22 or 23-year low. This is the last day of the month. You got a huge speculative short position that has been there for some time, and the horrible news that currency traders have been waiting on has been announced. Here we are. It's unlikely that come Tuesday they're going to say, oh, hell, we'll make it 50% tariff. How do you like that, And with Trump, maybe they will. But from a trading point of view, okay, this should be as bad as it gets. If the Canadian dollar does not fall on Monday when we come back to work here, or Sunday afternoon, people who are short are going to be kind of looking at each other, metaphorically anyway, and thinking, okay, everybody knows there's a huge short position. To make a profit on your short position, you got to be a buyer. You got to buy back your short. So who's going to buy first? And the guys that have been short for 2 months or something might think, okay, I don't think it's going to get any worse than this. Phone the broker, get me out. Be a buyer. I could see, and I could be dead wrong on this, but I could see the Canadian dollar closing higher on Monday, and if it did, I'd be a buyer.
The U.S. dollar index hit 2-year highs in mid-January, but has backed off a bit since then. What's driving the U.S. dollar, and where does it go from here?
Well, you've heard me say once, you've heard me say probably too many times, capital comes to America for safety and opportunity. It has been, in some respects, the only game in town. They've got the biggest big techs compared to the rest of the world. The rest of the world doesn't matter, on that score. American exceptionalism has been, in the lights here for some time now. So there's that. And I guess I've been more or less relentlessly bullish the U.S. dollar for the past few years anyway. People bring money to America to, let's say, dodge troubles in other parts of the world, or to make investments that look better than other parts of the world. I mean, American stock markets have incredibly outperformed European markets and emerging markets. Canadian markets kind of kept up, but it's still a laggard as well. It's just been the place to be. Now, I think that, there's a chance of that continuing. I think the Achilles heel on the U.S. dollar right here is going to be the market reaction to tariffs, and there's going to be clearly more tariffs to come. And in a way, maybe Trump, with his opening shock and awe approach by hitting his two largest trading partners and next-door neighbors, is meant to intimidate the rest of the world into getting in line and do what Trump says or else. There may be some of that. I think the Achilles heel, and I'll say it just to spit it out there, if you took the view that right now Trump is as popular with people in America as he is ever going to be. In other words, there's nowhere to go but downhill from here. I might be wrong about that. And by people, I don't mean just voters. I mean governors of different states who may be dismayed at some of the things that he's doing. We'll see. He's going to bump heads, clearly, with the Federal Reserve. He wants interest rates down, and they think they got a job to do regardless of who's in office. And, they're clearly, they didn't cut rates this time around. Trump may also find that even though he's got a majority in both houses of Congress, that it's a very slim majority, and not all the Republicans over there are going to agree with him on everything. And he can't just run the world with, what do they call it, presidential directives, or whatever that term is that they're using.
Executive orders.
Point, he's going to have to go to Congress and get agreement with some of the things he wants done. And if that agreement's not there, then, that might be another chink in the armor, as it were, against the U.S. dollar. But it's been the place to be, certainly for the past couple of years. Interest rates in the United States are substantially higher than elsewhere. I mean, just right here in Canada, our 2-year interest rates are about 155 basis points lower than the rates in the United States. And that is an incredible magnet for drawing capital out of Canadian investments and into U.S. investments. And while I'm rambling here a little bit, let's go with it's the darkest before the dawn kind of a view. And I think in some ways, maybe Trump poking Canada with a sharp stick the way he has been a hell of a good wake-up call for Canada, particularly for the government that we have here, and dealing with the reality of the world, whether that's paying our fair share with defense of North America and NATO contributions and that sort of thing. And something I've said so many times, we are blessed to be sitting on an incredible resource of energy in this country, whether it's hydro, whether it's oil, natural gas, uranium, whatever. Let's use that to our advantage, and I would think as the world goes forward that Canada is going to be seen as a provider of that sort of thing. And maybe that's why Trump casts a covetous eye on the potential 51st state.
Gold prices have closed higher for 5 consecutive weeks and hit all-time highs this week. Does that rally continue?
I'm a little suspect on that. Yeah, we've had a run here for 5 weeks. And part of that, the last 3 weeks anyway, the U.S. dollar has been weakening, which I think has been a little positive for gold. Why do people buy gold? Well, people, that's not monolithic. Let me go to one of my little thoughts I have here on gold and gold shares. Gold shares have woefully underperformed gold, and I've been puzzling over why. I mean, a few years ago, you could have said, well, some of the gold mining companies just made decisions about what they're doing with their money that the market clearly thought were dumb. They bought copper mines or whatever. But I think it's really this simple. The big buyers of gold the last couple of years have been central banks, and the central banks, particularly Russia, China, but others as well. And I think they got a scare when the Americans did what they did with sanctions following the Russian invasion of Ukraine, and decided that they'd like to have more gold and less U.S. dollars, let's say it that way. So the big buyers have been the central banks, and they want gold. They don't want shares in a gold mining company. So that has caused the spread, or the arb, between gold and gold mining companies to really widen. In other words, gold's gone up like a rocket, and the gold mining companies have kind of trundled along at a pretty slow pace, well behind gold. Now, that sets up a wonderful opportunity for people, and Jimmy, I got to preface this and say this is not investment advice, just me talking. But the gold mining companies are making money hand over fist with the price of gold where it is, and nobody's buying their shares. Now, part of that is there's one gold mining company, that's Newmont, that's in the S&P 500. Most of the new money that's going into the markets these days is going into passive indices, and those passive indices are putting 30 cents of every dollar in the 7 big cap tech stocks and spreading thinly around the rest of it. So there's just no new capital going into the gold mining sector. But for value investors, or people that don't want to just be passive investors, want to dig around and do their research, I think there's probably some great opportunities in the gold mining companies. Okay, sidebar, come back to gold. There's been some machinations in the gold market lately that, I tell you what, I don't fully understand, even though I've been trading gold for 50 years. But to put it to you this way, there's been I was going to say a ton. It's more than a ton. It's been a flood of gold bullion leaving London, coming into New York, as the spreads between New York and London have caused a lot of gold to move around because of an arb. And I think that may have accounted for part of the price rise we've seen here the past, let's say, 3, 4, or 5 weeks. So I'd be a little suspicious, that we're going to just go close higher for week number 6. But, I'm a trader, and for people that have got maybe a little longer-term horizon here, I'd be inclined to think that gold is going to going to be bought. It's going to be bought as an activity where people just don't have much confidence in government, as opposed to gold being bought as a hedge against inflation. I think that's a fundamental different reason for buying gold, and I just think that people may continue to, at a longer-term time frame anyway, continue to be leery about the wisdom of their leaders.
The Fed kept short rates unchanged this week. The Bank of Canada and the European Central Bank cut rates by a quarter. What are your thoughts on interest rates?
I'm kind of a little mixed there. I'll tell you what. I mean, right now I see the United States is paying more money on interest expenses. In other words, they got bonds out and they got to pay the return on those bonds. So they're paying more money out in interest rate payments than they are spending on defense. And it looks as though going forward that not only the United States but virtually everybody else, the governments, are going to continue to spend more than they take in taxes and whatever other revenue. Let's include tariffs in that. And that's not a good picture for the bond market. And I think that the deep pocket people that have the flexibility that don't have to be in bonds all the time, and some pension funds obviously would have a requirement they've got to have so much of their capital in bonds. But for discretionary traders, I think there's going to be a predisposition to worry about the supply of new bonds coming to the market, and they're going to back off unless they get paid more to buy the bonds. In other words, they need to see prices of bonds go down, yields to go up. That's kind of a gut instinct that I have about the bond market. I think that's a driving force. I think it's been certainly in play for the last several months, and it'll fade from time to time, but I think that's going to be probably the most important factor in people deciding to invest in bonds. Now, if the stock market gets a case of the wobbles, there may be some money moved from stocks into bonds. If the economy looks like it's going to go into a recession, the bond market might get bid and stocks will be sold off. I don't think bonds are going to go to zero anytime soon, but I think that worry about government spending more than they're taking in is going to be a real weight on the bond market for a long time going forward.
The Canadian government says it's putting off its capital gains tax hike until next year. What kind of impact, if any, will that have?
I saw that headline on Friday, and I was honestly so busy doing stuff that mattered to me that I didn't think that through. I don't know, Jimmy. I just don't know. I didn't know what their policy was on interest rates. Maybe it won't matter because we get a change in government in Canada, but I'll have to look into that. But thanks for reminding me, but I'm going to say I just don't know.
The S&P nearly reached new all-time highs last week, but then broke sharply on the DeepSeek story on Monday when NVIDIA lost over 17% of its value. It rallied from Monday's lows to Friday's highs, but closed lower Friday. What do you make of that wild price swing?
Okay, I'll give you a kind of a big picture view here and then maybe narrow it down. I told you I was just down in Palm Springs. I see the golf courses down there charging what are, from what I remember going back, over the last 20 years I've been going down to play golf. They're charging an arm and a leg to play golf down there in U.S. dollars. When you translate it into Canadian dollars, it's like, oh my God. And you can't get a tee time. The courses are booked. I used to have a season's pass at Whistler for years, and I haven't been over there because it's just inconvenient to go over there. And also, if you just walk onto the hill these days, it's $300 to ski, and they're packed. So that, and I see, when you go into a restaurant, you go, holy gee, these prices have really jumped. And people are buying them. So there's been kind of a bifurcation in North America here anyway. Let's not, because I don't know about the rest of the world, but just here. where people who have made money in the stock market or real estate or whatever their business is, Bitcoin, whatever, have got the money to spend to do these things. Where I also understand that we've got more people than ever, going to food banks because they can't afford to pay the prices for food in a grocery store. So we've got this bifurcation going on out there. We have a stock market here that is, prices have been going up because companies in the S&P, let's leave it at that, have been able to raise their prices because people will buy this stuff, even though the prices are up. And it's been wonderful news for the companies and the shareholders of the companies that their earnings have been going up because they put prices up. And I just think that it's getting overdone, okay? I think it's getting overdone, and at the same time, if you look at the stock market, it has really done nothing but go up for the last 60 years or whatever, wherever you want to start from, and that's the whole selling point on passive investing. Just put your money in the stock market and you'll be rich. Don't worry about it. Don't try to pick stocks. Don't try to time it. Just keep putting money in there every month, and you're going to be rich and famous by the time you get old. Those high prices are up because the shares are up because the companies have been able to put up the prices of their products, and people are paying a record high multiple on those high prices. So it just feels to me like we're overdone, and I realize that I've thought that on and off for the past few years, certainly since the COVID time, and we're up about 40 or 50%, I think, in the NASDAQ over the past couple of years. And I think there's an expectation that that's just going to continue, like you just can't lose. And I'm a sentiment trader. I try to sense what's going on with folks out there, and when I see that kind of an attitude, or at least I think I do, then I look for a break. Now, in the very short term, corporate buybacks here are probably going to be a record high this year. That's an important factor. That, let's say, that runs around $4 to $5 billion a day from corporations buying back their own stock. January seasonally is a time when people put money to work in the market, or money managers put money to work in the market. So, the market sort of should be strong this time of the year. But as you pointed out earlier, the stock market broke when when the White House announced that those tariffs were going to go ahead right on schedule, as it were. I'm a little from Missouri here. From my trading accounts, I'm short the stock market here. That as of Friday, when I see price action like that, so that's kind of what I think, Jimmy. And I don't want to give people investment advice. I just kind of say, this is what I'm thinking. This is what I'm doing.
Front month WTI crude oil rallied about $13 from December's lows to mid-January's highs, but has dropped about $8 since then. Are the energy markets taking their lead from Trump, who's saying, drill, baby, drill?
Yes, he is. Are they? Well, I think that's in there, but I don't know how important that is to the oil companies. I think whatever the price of oil is going to be more important to them, whether or not they want to, go out on a limb and drill somewhere and hope they find something. And they need to know that the price of of crude is going to be strong enough so they can generate a profit. I think the market raced higher into mid-January as time spread. That is the difference between what you pay for oil now and what you pay for it sometime later in the futures markets really spiked. I'm not sure why all of that was there. I think there was some. The market for speculators had got about the smallest net long they'd been in some time in mid-December, and then maybe people thought they needed to get back into the market. Certainly part of the run up from whatever it was, $68 up to about $80. People love to buy a market that's going up. Doesn't matter how sophisticated they are, and so a rising market drew people in. I think drill, baby, drill is more about is an attitude. Like Biden, didn't he just shut down the ability to explore for oil off the coast of the United States days before he left office, and Trump says he's going to reverse that if he hasn't already. I'm wondering where and when Trump bumps heads, as it were, with OPEC. OPEC's not as potent as they used to be in terms of the amount of oil they produce relative to what's produced in the world, but still they're a big factor. They have been restricting their production for some time here to try to keep prices up. And, if all of a sudden they see that the United States is going to ramp up their production because the president's saying drill, baby, drill, they may decide to front run that and start selling crude themselves, which would likely, more crude, which would likely drive the price down, which would then cause American drillers to not drill. It's a complicated story that way, but yeah, I think drill, baby, drill is more of an attitude and a marketing thing than something that seriously impacts the market. However, I'm just trying to remember the name of his newly appointed energy secretary, and I'm embarrassing myself because I forget people's names these days, but I just thought that was a brilliant pick. The fellow that he picked, Chris Stewart? No, that's not right. To be his energy secretary. So, I'm not faulting the Trump and saying he's getting things wrong or getting everything wrong, but I thought he just did a great job of putting a brilliant guy for his new energy secretary.
Before we wrap up, what are some of your big picture market ideas?
Well, I mentioned that thing about, I think, this bifurcated society that we live in, where we've got the people that have got lots of money and we got people that don't have enough to buy food and feed their kids and so on. I think that's a problem. I think Trump will butt heads with different people, certainly the central bank. I think he's probably at his peak popularity right now, and it'll go down from here as he either pisses off people or, he can't get things done or they just get tired of his behavior. I tell you what, I see, coffee, live cattle, cocoa, orange juice, eggs are all at record high prices. That plays kind of poorly to that bifurcated, strata of who's got money and who doesn't out there. We've had a great run in the stock market. I think there's some risk that it's overdone, and I think you have to be really careful about trying to time that. I also think, Trump is just another example of, let's call it the end of woke. Whatever, Milei, or however you say his name, the president of Argentina, started that, but it was interesting. The World Economic Forum sort of looks so yesterday now in the light of Trump and all of the plans that they had. I said earlier, I think Canada's blessed with the energy supplies that we have, and our current government trying to lecture all of us by putting a carbon tax on, like, you shall not drive a gas-powered automobile, you must go electric, is kind of the drift of what they were doing, and that should get reversed. I think we ought to have cheap gasoline and cheap fuel and cheap natural gas so we can do stuff. And Jimmy, maybe one last thought. I think I said earlier, it gets the darkest just before the dawn, and a lot of Canadians might be feeling pretty wounded here with being yelled at by Trump and, realizing that, we have been coming up short in our share of defense. And, we should have done a better job in keeping fentanyl from flowing through our borders and into the United States, and other things. But Canada's a wonderful place. We got wonderful resources here, and we got a wonderful government in charge of things. I think the world would be a lot better, certainly for us Canadians.
Victor, thank you so much for being on This Week in Money.
Jimmy, it's always fun to be on with you. It's obviously a little bit more of a personal rant from me this time around, and it's those kind of times. It's a bit emotional with what's happening, and I hope things get better.
My guest has been Victor Adair. Check out his website, Adair.Ca. And that wraps up our show for this week. We'd like to thank our guests: Ross Clark, Maxime Bernier, and Victor Adair. And thank you for listening. If you have any questions for the show or for any of our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.